Markets have bad breath? Where's the Listerine? What's up, everybody? Welcome aboard to Bubba's Bottom Line. And as we've been watching these markets churn and churn to the downside, we have identified one of the things that I think everybody should know and which is being much ignored throughout the pundits, throughout the experts, and throughout all the analysts out there. And that is that the market does have indeed bad breath. And what does bad breath mean? It means simply that there are more new lows being made in the market than new highs. So as much as we want to talk about how great the markets are right here, there are so many warning signs that are staring us right in the face that we continue to ignore. But that one of the biggest is you're seeing a lot more new lows be made in the market than new highs. You are seeing what is known in the business as painting the tape. And when you paint the tape, you make it look better than it is, so that it allows those who can to kind of, it's not really manipulation, but it creates a false narrative to what is happening in the markets. So when you look at the markets, and since most people only look at the markets from what they hear on the news, they look at what the Dow Jones Industrial did, okay, they say, so we've seen for the last few weeks, the Dow has been the strongest indice of them all. Now, again, strength is a relative term, but what does that really mean? Well, the first thing it means is that when the Dow is the strongest, it means that the general markets are in their weakest condition. The Dow is where people go when there is a risk-off trade. The Dow is where you go to get the big companies with the dividend paying, not much overall net risk to the markets, although obviously we all have risk, but again, there's no real high flyers in the Dow. So when the news reports the markets, which is one of the things that pisses me off more than anything because it does not tell the true story, and you hear at the end of the day the Dow was up 50. What they don't tell you is that the S&P was down 10, the Russell was down 20, and the Nasdaq was down 80. Okay, so the fact that the Dow is higher is really no big deal. And this is known as painting the tape because the Dow is an easier index to make look better for a short period of time because of the way that it is weighted, because of stock. You take a stock like Boeing or others like that carry a lot of weight in the Dow, and you buy enough shares, you can make the Dow look like it's really up when the actual general markets are really down. And I think that's what we're seeing here. You know, the Russell tipped this off long ago when it started to fall apart, a couple of weeks ago. And basically, we see the Russell going down each and every day. And it's not just going down a little bit, it's getting clobbered on a daily basis. I mean, we're down 6-7% right now in the Russell from the recent highs. And again, we're not telling you that the world is coming to an end, that, chicken little, chicken little, the sky is falling. We understand that the markets are in dire need of a major correction. We understand that all of this cheap, free money that's been out there, all the people chasing the markets for all these years are going to eventually run out of steam. Now, again, is it going to be today, tomorrow? Is it going to be next week? The answer to that is not good. But what we are seeing with the underlying signs of these markets, the bad breath, the falling apart of the Russell, the falling apart of big tech. Remember, big tech was the only reason that the markets made new highs anyways. Tie that in with a rising rate environment, okay, which we've got a rising rate environment. Excuse me, we can say whatever we want, that rates are not going to go higher. They're going higher. Whether you like it or not, they're going higher. So the first big warning sign is this, okay? A year ago or so, people would have killed to get 3% yield on their portfolio. Before they started pouring more into the market, they would have been thrilled, okay, to get that 3% 10-year and been happy about it. All of a sudden, now that the 10-year has clicked up to 3.2, it's been salivating between, let's say, a little over 3% and 3.3. Now that we've gotten here, nobody wants to get in because why? Well, they're looking for that last spurt in the equity market. They're looking for that last opportunity, and we call that the last run on greed. And of course, that's what we've seen for 10 years is the continuation of the dip buyers. But what we haven't seen for the last 10 years is the general weakness that is the underlying signs of the market. So now we take that part of the weakness and then we talk about earnings. Now, earnings have been good. Again, we're not saying that earnings are not going to be good. And certainly, we're not warning that the world's going to fall apart. Okay, of course, if you look across the globe, you might find some, which we'll talk about later. But now, okay, the forward guidance has not been as good. Okay, take a look at Netflix last week. Netflix had great earnings. Stock popped, got close to 400. Before it opened the next day, it was down around 370, and then it closed lower on the week. That is not a bullish sign. That is extremely bearish. You've got some big earnings coming out this week. You've got Amazon, you've got Google, you got some major players coming out here. So, Caterpillar. So what's going to happen? Well, we'll see. But again, I think one of the things you have to look at is the forward guidance. So if we take a look at the debt, we take a look at the rising rates, and now what are we going to have now? We're going to have a battle to hire employees, which is going to mean rising wages. And again, I'm thrilled that the employees are going to finally get their pay. But what's happening here is now that money, the higher rates and the paychecks are going to come right from the bottom line. So they're going to have to guide lesser forward. Okay. Plus the fact that we've already have an assumption that the economic times are going to slow down a little bit as we go forward. And so you've got a lot of things building here that, again, we continue to ignore. As we mentioned last week, banks continue to buy loans. Now, again, they're not lending real fast generally to the public. They're letting the smaller lenders do their work, and then they're going in and buying those loans anyways. You know that the debt is ridiculous here and is exploding to the upside. Take that and combine that with what's going on in China, okay? The China markets are collapsing, okay? And China is looking down. I think it's down about 40% or so right now and going lower. Right now, there is no hope that it's going to stop going down. Now, again, eventually it will find a balance. But again, we could use the term look out below. Look out below, again, because this doesn't look to be stopping anytime soon. Now, if you were an investor and want to nibble a little bit in China, it's probably a good time to nibble. But again, there looks to be a lot more room to the downside in the Chinese markets, in the Shanghai and all the others. Why? Because, again, the trade wars are putting a lot of pressure on China. They are not putting any pressure on the United States. That's one thing I think we have to always stand and clarify, that we might hear the whining from the politicians. We might hear the whining from Mitch McConnell about how we need to sell these fast. This has more to do, in my opinion, this has more to do with the constituents, the lobbyists, and some of the bigger players that don't want to take the chance that something will go wrong here versus the real facts and the real truth of the matter. And I think that's one thing we have to learn to separate from when we hear the politicians speak and when you hear President Trump speak. I think that President Trump, in my opinion, has no axe to grind. He is not looking to get extra favors for himself. His goal, in my opinion, is to become the best president ever. My opinion is he is going to continue to work hard to make himself become the best ever. Okay? He is not trying to push one side or the other to make sure that he gets his lobbyists and his constituents taken care of. I think that is one of the problems that we've seen throughout his presidency. That's, I think, one of the things why we're seeing so much pushback from all these, both sides of the aisle. Again, this is not just a left side of the aisle. He has issues with the right side as well, which is why he needs to get more into the right side, because he needs some people that actually really care about America and don't care about just themselves and their lobbyists and the guys that pay them. So I think that is something that's going to create a much bigger problem in China, and I do not see Trump relenting. And I think as you look forward to the midterms, the first thing is I believe that there's not going to be a blue wave. I think there's going to be a red hole and possibly a red wave. I think we may get a few others. Now, again, I don't want to put myself in the red or the blue category. I'm in the Libertarian Party. Okay, I'm more down the center. But obviously, in the cases of what we're seeing right now and the overall harassment from the left, I'd love to see this continue. I think it's great for the economy. I think it's great for what's going on. I do think that we go back to the same issues that we talk about a lot, is the massive amounts of debt. But again, I think as we come into the election, okay, which is 2 weeks from Tuesday, okay, you've got a lot of reasons why you might see more red. Number one is the Kavanaugh hearings were very rough, and if you watch that, you can't possibly. You might not have liked Kavanaugh. You might have wanted to see more information, but you cannot possibly like the way that it was handled on the left side of the aisle. Number one. Number two, there's now been proof that the FBI was involved in trying to infiltrate the Trump campaign. There's also Mueller is now ordered to prove Russian conspiracy. The Russian meddled in the election. So again, I think those are things that we're now seeing were not true. And what have we done? We've wasted millions and millions and millions of dollars on nonsense. Okay, and I think this is what you see throughout the manipulation of the overall system. And again, this goes back to all of it, that these guys and gals that are in Washington, and I can't say all of them, but most of them, in my opinion, are strictly in it for themselves and how much money they can steal out of the system and how they can get, again, stealing is probably not the right word. They have their way of getting that money illegally, but in my opinion, it's not legal, but it is based on laws that it is legal, and I think it's a problem. So now tomorrow we come up to the 22nd anniversary. Is that right? What am I talking about? 1987. The 41st, the 31st anniversary. Maybe I could add soon here. The 31st anniversary of Black Monday. Now, obviously, October 19th was on Friday. October 22nd tomorrow. Can there be another Black Monday? Okay. And we're going to step out here for a break, and we will answer that question right here on Bubba's Bottom Line when we come back from the break. Can there be another Black Monday? That will be the question. We'll get that when we come back from our break. This is Bubba's Bottom Line. Todd Bubba Horwitz will be back with more after the break. Hey, everybody, what's going on? Obviously, we had a great hedging webinar yesterday. If you did not participate and you'd like to get the recording, just send me an email at bubba@bubbatrading.com. I'll email you the recording. You can check it out. But we had a great thing, and we made a great offer. We're going to offer the free futures trade for anybody who signs up for the hedging course, free futures trading for 3 months. Also, our new futures portfolio, which includes brand new today, an agricultural portfolio as well. In the meantime, don't forget about our high school program, highschoolinvesting.com. If you'd like to help us out, go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. And now let's get back to Bubba's Bottom Line with myself, Todd Bubba Horwitz. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And before we went to break, we asked the question, can there be another Black Monday? And the answer is no. There can never be another Black Monday the way that we saw it on the Black Monday. And the answer is, and here's why. Okay. Since that Black Monday, the markets have put in what they call circuit breakers. So when the markets fall hard, and I forget all the exact numbers, but at certain points, the markets will close. Okay, the reason that they want the markets to close, just like after 9/11, the reason they closed the markets for a couple of days is to let cooler heads prevail. So by using the circuit breakers, which they did not have in 1987, the markets will stop. And if they continue to fall apart, let's say the first time they stop for 10 minutes, then I think they stop for an hour, and then they may close for the day. What the reasons for that is to slow down and let the big firms and let the panic subside and allow buyers to step back into the market. So that is why there will never be a Black Monday as we know it. Now we're going to have some big selling, and there's going to be, in my opinion, another 50% haircut in the markets at some point. But again, long term, the big picture, the big perspective, we believe markets will continue to rise and they will go up 8% year over year on average, but there will be a meltdown. We may be starting it right now, and I wouldn't be surprised as we see the markets last week you had one big up day and 4 down days. Okay, now the big up day, was good, but again, that is exactly the pattern that we're looking for when we see these markets and we work on these markets. That's what we were looking for. Okay, remember, we say we are looking for a black swan event, which we believe will be, close to 4% 10 years with $1 at 97 to par. But forget all that. What we're seeing here is the overall markets pushing lower, okay? And what we see is this big, sharp rally, which, as we know, okay, bear market rallies or markets that are turning over rallies, the bigger and the more vicious that they are, the more likely they should be sold. And of course, had you sold that rally, you'd be very happy right now because it's sold off. It's given up almost all of the gains from that huge rally on Tuesday. And again, that's when you see these vicious moves up, that's when you sell. Now, if you take a look at the rally, okay, and you look at the general for last week. So Tuesday, the NASDAQ rallied, I think, over 200 points. It closed lower than the week and gave up most of those gains, okay? So you see that although it looked great, when it's all said and done, we've lost the gains of the Russell, NASDAQ through the week, and it's going to get uglier. And I think you can expect to see a lot uglier action. In fact, on my Saturday call with my subscribers, I talked about I want to see the action on Monday before looking and issuing any new trades right now, because again, I think there's some big stuff going on here. And I think as we talked about the pain in the tape and the other things underneath the surface, there's some very, very big problems here. And I think one of the things we're going to see is I think you're going to see the Fed. As you know, we are not big fans of the Federal Reserve. As you know, we believe we should end the Fed, at worst audit the Fed. And I've said this before, they are going to blow it. Okay? And I think that you're going to see rate hikes faster than they're saying right now. I think they're going to get away from them. I think they're going to get concerned. And I think just like traders, I think that the Fed is going to puke and they're going to have to they're going to hike rates too fast, and that's going to change the dynamics. And I think this is pretty much of an automatic. I'd like to bet on it. Well, I guess I have already. It's like I already have a bet on it. But I think one of the other big concerns that I see here is we've got rising rates, we've got a weakening economy, we've got bad market breadth. I think we've got banks that are over leveraged once again, even though it doesn't show necessarily the way on their balance sheet. But again, this cockeyed accounting that we get always creates a problem. But now you start to look over into the bond markets. Okay, the bond markets continue to fall, which means higher rates. They had a little bit of a rally, which is no surprise. We expected the bonds futures to rally last week. It wasn't a surprise. We started to see a fear trade. But you're starting to see gold starting to break out. Now, we've been on top of that trade the entire time, and now it's consolidated again. It looks like if it can take out the 1240 level, okay, then it's going to 1275. So we continue to look at that. But these are signs of things starting to change and where the assets are flowing. Most of the week, it was a very rough week for the grain markets last week, but it really wasn't that rough. They actually didn't violate any real major things. I think corn at 365 is solid. I think soybeans at 850 is solid. I think wheat right where it's at is solid. I think you continue to look to be a buyer of these products. My theory is very simple, okay, is that as the equities start to sell off, which I believe that they will, you will start to see money flow into the alternative space. One of the big alternative spaces is the grain markets. We're big fans of grains. We think they break out. We think we see more of the moves we saw last Monday, okay? We basically rallied huge on Monday and spent the rest of the week dribbling down. You had a feeder on cattle on feed report. Cattle on feed report on Friday. It was funny, the numbers were huge and the increase was big, but it did not meet expectations, which means that I think you're going to see some rally here, okay? I think that there was more priced into what we thought, and I think you're going to see some rally here. The report appeared to be somewhat bullish. Okay, so I think you're going to see a rally. Now, of course, if you look at the different products right now, hogs have kind of broken down to the downside again. I think they're at a must-hold level at the basis December at about 50. We like them. We're buyers. But again, it's a little bit concerning now, the way they've traded the last couple of days, opening higher and closing lower. Fats look great. Feeders are the one concern, but of course, feeders are a little bit affected by the price of corn. And I think they've overdone the January feeders to the downside. So I think we look for that to continue to move higher. Oil has done what we thought it would do. Again, we puked it out, unfortunately, but we've been able to enter and get back in. But in the meantime, obviously, we're still licking our wounds from some beatdowns. But I think you're starting to see exactly what we thought. And I think our next target is 64. Now, I wouldn't be surprised to see a pop early in the week as we saw it close somewhere near the support line. But what I really hate, and it really annoys me, is the morons that are out there saying, well, maybe we can see $400 oil. Now, I can say this to you, as you guys watch me each and every week, that this is more of a contrived and manipulated type of situation to try to drive the prices up. Now, I have been asked to be on air a couple of times, but I had to decline because they wanted me to say things that I do not believe. Like at one time, this goes back a couple of years ago, but they wanted me to say that oil was going to get to 200, which I did not believe. Okay, so again, I will never say anything that I don't believe, but people that are trying to force you to make an investment in something, in this case, they want you to buy oil because they actually really believe it's short, so they make these ridiculous, moronic calls to, in this case, to the upside, and of course, they're looking to sell underneath. I think that's one of the things that we look at. I think one of the things you also want to look at, and why this always makes the news, is the cryptocurrencies, the ICOs, initial coin offerings, and right now there's about 80% of them, the ones from last year, are in the red. Did we not forget the NASDAQ? Okay, again, we can compare this somewhat similar. The technology here could be somewhat similar to the technology that was from the NASDAQ back in the day, and 90% of those companies didn't make any money. So why do we think this is different? Of course, a lot of these ICOs aren't going to make any money because a lot of them are garbage. A lot of them are going to go out of business. But again, that's where you have to use your due diligence. I think if you take a look at the cryptocurrency space in general, I think the action has been extremely bullish for a longer term run. I think that the ability to hold above 6,000 in Bitcoin has been remarkably strong. So I look for, listen, I'm an owner, and I'm losing. I'm in the red too. And I got in, and I either got in 60 or 70. Whenever I got in, I'm a loser at 2 right now. But you know what? As I tell you all the time, some things you don't put a lot of money into. You use the dinner and a movie theory, or you go into Vegas theory. You take a chance, you put them in, and that's what I'm doing. Okay, if I lose my money, I'll lose my money. I'm not worried about it. But I think I'm going to end up making a lot of money. Okay, of course, I thought I was going to Mega Millions too for $1.5 billion. Of course, I think you have to play to win that. But in the meantime, okay, I think that they look like they're in an outstanding position. Okay, I think they're ready, and I think that, you know. So as we just recap everything before we go to my commentary, I think the markets are in trouble. Okay, and again, I don't want you to go out and sell. Okay, if you remember on Thursday, I did an early update saying, don't panic. We don't want to panic here. We don't want to do anything desperate or drastic. Take a look at the market, take a deep breath, okay, and then make your decision based on a fundamental or technical reason why you need to get out. Okay, you know, if you've got a company that you're long in the stock market that is going lower, okay, and the fundamentals have changed, you know, then you have to throw out the technicals. If there's a problem in the company, now then you just need to execute and exit that trade. But don't ever exit on a panic, okay? Let the markets always settle before you exit. Just like I tell you when it's going up, let the markets come back to you before you want to run in it. Again, these are things that hurt more traders and investors, is the emotional side of the trading. Okay, it's just like hearing that stupid call for $400 oil. It's like hearing that stupid call that we're going to 3,000 S&P this year. Now, could it happen? 100%. There's no question that it could happen. but what is the likelihood of it happening? That's what we look at, is what are the probabilities of this happening. So again, remember, when the market's getting more volatile, which it is right now, do not panic. Volatility is actually the great forgiver. If you understand what you're looking to do and what you're trying to accomplish, then volatility will give you a bigger edge and will give you an edge on the general markets if you've learned to understand it. This is Bubba's Bottom Line. Todd Bubba Horwitz. We're going to step out here for a break and come back with my commentary after the break. Bubba's Bottom Line. Hey everybody, what's up? And of course, as you know or don't know, I did a hedging webinar yesterday. It was a great webinar. We covered a lot of ground, showed some tips and tricks on how to do it. If you did not participate and you'd like to get the recording, just email me at bubba@bubbatrading.com. I will send you that recording, and we made some great offers to go along with it as we go into this is going to be our last class, of 2018. So we want to make sure, we want to get hedged. If we believe this market's going to get hammered, we'd like to get hedged, although we'd always like to be hedged. So make sure you check that out. So again, if you want that recording, just email me at bubba@bubbatrading.com. And of course, don't forget our high school investing program. We're really struggling trying to keep this thing going. So if you'd like to help us out, go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line and my commentary with myself, Todd Bubba Horwitz. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And of course, every week I put my 2 cents in my commentary. On Monday nights, we call it Bubba's Bitch. But, when I look at things, and of course, I'm part of the media. I do a lot of spots. I do a lot of hits. I love being able to get my opinion out, okay? So people have an understanding of who is talking about what in markets. And I am the only guy on air, okay, that achieves my income from trading my money, okay, my own money. I don't have clients that invest. I'm not an advisor. I'm not in a firm. I'm a trader, okay? That's what I do, okay? All these other guys that you see are not traders. They're not independent traders. They work for firms. They're newsletters. They're doing whatever that they're doing. And I have nothing wrong with that, except the fact that I do not like that all of the networks only want to have on typically the bull side of the story. They very rarely give the other side of the story, and they let people make comments that are ridiculous, okay? And they let them change their mind. It's one day, we're buying. Oh, no, we're selling. We meant we were selling. And again, I think that's a disservice to the average investor, the average viewer out there, because many of us listen to what we expect some of the experts say, hoping that they are telling us what are the facts, when it's really they're telling us what's going to help them get into our pockets and sell us more product. And I always have a problem with that because, again, I want to, if you go back to the movie with Tom Cruise and Jack Nicholson, right now I can't remember, A Few Good Men, okay? I can handle the truth, and I want the truth, okay? I don't want nonsense. I don't want BS. I don't want to see one company represented that has 5 different newsletters that each play a different side of the market, okay? So that one of their newsletters is always going to be right, okay? I find that to be a great problem. I found that to be a problem in the tout services over the years. I find it a problem today, okay? And I do not like that we only get a view of one side of the market, okay, and it's typically just the bull side, because I think that also misleads the average investor. This ties into what we talked about, the painting of the tape, okay? This is done to mislead the investor. It's done to create action, okay? It's like the fear mongers will come out, and one of the biggest fear mongers who was out is now saying, well, buy cheap puts, okay? Well, again, I don't know how much you know about options or not know about options, but options, there's no such thing as a cheap put, okay? Options themselves are always fairly priced unless they are expensive, okay? Market makers are not giving away ice in the wintertime, so you can bet your sweet potatoes that there is no cheap option. So remember, when you hear these things, okay, remember the objective that's behind the person that's saying it. That's my advice to you, okay? Now again, I sell services too. So again, but I always tell you exactly what I feel, and it's all you're going to get the same message from me, no matter what network I'm on, whether I'm doing Bubba's Bottom Line or I'm doing one of my webinars. You will get the same story and the same message. Okay, that's what I'm looking for. I don't want to create fear. I don't want you to buy because of fear. I want you to learn and understand. And I think that is the disservice that is done by the major networks because they allow more of this garbage to flow without actually telling the truth. They do not have enough respect for their viewers that they can have an understanding of how the markets actually work. And to me, I find that pretty disappointing. In the meantime, everybody, have a great weekend. This is Todd Bubba Horwitz, Bubba's Bottom Line. And of course, we got football. We got football all day today, but the big game tonight, the flex game, Kansas City against Cincinnati. I think that Kansas City continues to roll. As much as it pains me to say, I think Kansas City continues to roll. Have a great weekend, everybody. Thanks so much. We'll see you back here tomorrow for Bubba's Daily Update and next week for Bubba's Bottom Line. Thanks, everybody. We'll see you later.